This is absolute last case scenario. I have only done a couple of these in the 15 years that I have done this because it is last. The world ends. I'm going to have to do an RPU. And the reason why is because what happens when you do a reduced paid up or RPU, it stops your premium. Hello, and welcome back to the podcast. Thank you very much for being here. I appreciate it. Okay, let's talk about what if I can't pay my premium? This actually is, I don't know that I've ever talked about this topic. I'm not sure. Now, on the Farming Without the Bank podcast, you're going to want to go over there and listen because I talked about people that stop paying their full premium and why that is a really bad idea as well. But let's talk about if you can't pay your premium. So I have some clients that their premium is due kind of at the wrong time of the year, right? They set up their appointment with me in the winter and it takes 4 to 6 weeks to get all this stuff going. And so you see me, if you're meeting with me in April or March, we're going to probably have a policy that's due April, May, June, somewhere in that aspect. But guess what? We're in the field and that is when the majority of our expenses come in. And so sometimes maybe we have rental property and we just have a lull. If we have an Airbnb, for example, and we have a lull in that our premiums due in the winter, but there's not a lot of people staying at our Airbnb in the winter, whatever might happen. Life happens, right? And so what if I can't pay my full premium? So you guys know, if you are a client, you are not a client, here's a little insight. Let's just say that your premium is $20,000 a year, but your minimum might be $10,000. If your premium is $10,000 a year, your minimum might be $5,000. Typically, it's about half. The minimum is about half of your maximum. So a lot of you have probably heard, oh, there's no flexibility in whole life. That's why we're going to sell you universal life. Bogus. There is 100% flexibility in the way we structure our policies. And so let's just say that your premium is $20,000 a year and your minimum is $10,000. Well, if you can't pay the $20,000 at renewal, that's okay. Just pay the $10,000 and then you can add the rest throughout the year. If you don't have it, you just don't put it in. There were years I couldn't pay my full premium. It's okay. I just didn't get it in there. I wish I would have. Now, probably about 9 years later, I wish I would have gotten it in because there is a significant change in what my cash value should have been compared to what it is. But if you can't pay it in full, that's okay as well, because we can go and pay it monthly, quarterly, semi-annual, and you can change that every year at the time that your premium is paid. Now, some companies they want a 30-day notice. So if you're listening to this and you're not a client of mine, then you make sure that you understand those terms with your company. Is your company saying, hey, you need to give me a 30-day notice if you're going to go from annual to monthly? The company that I use, which the majority of the time is One America, they are unbelievably amazing flexible. You can be on monthly and go to annual within the year. You don't have to give them a notice. You don't have to decide at your renewal date or 30 days before your renewal date. Because what's funny is insurance companies don't typically send their renewal notices 30 days in advance. They send them 2 to 3 weeks in advance. And so by the time it gets to you, it's a little late to be changing stuff. But you can change it from annual to monthly. If you started out monthly, you can change it to annual. Okay. So if you have a problem paying, 1, you can pay the minimum. 2, you can change your mode of payment, annual to monthly, quarterly, semi-annual, whatever works for you. With One America, then, if we change it to monthly because your premium's due in the not a good time, and then 3 months later or 4 months later, you have the money to pay it in full, great, we can pay it in full. They're amazing. The third option is you can borrow cash value to pay premium. Yes, I've done this. If you have cash value and you haven't borrowed it for everything else, You can borrow cash value to pay your minimum premium. You can borrow it to pay your full premium, whatever. You could, 4, use dividends to pay some of that premium. Now, not ideal. 4 and 5 are going to be like worst case scenario. Okay. So and that's only if you have enough dividend to cover that premium. So we're talking like probably not, unless your policy is really old. You are not going to have enough to cover the premium. And then the 5th thing you can do is what's called a reduced paid up. This is absolute last case scenario. I have only done a couple of these in the 15 years that I have done this because it is last. The world ends. I'm going to have to do an RPU. And the reason why is because what happens when you do a reduced paid up or RPU, when you do that, it stops your premium. You no longer have premium. It reduces your death benefit. Cash value remains the same. Okay? So we reduce death benefit. Cash value remains the same. Premium gone. Everything keeps growing. So death benefit will continue to grow back up. Will it ever get to where it was? Don't know. Not sure how the policy is structured. Everybody's going to be different. Depends on age and all that kind of stuff. Cash value, you can still use it. You can still borrow against it. You can still do all the things. Okay. But what happens is you can no longer ever put money into that policy. That policy is locked. Wherever it is growing with interest and dividends. You cannot ever go, oh, hey, now I have money. I want to reopen. I want to start paying premium again. You cannot do that. Done. Policy is locked. Okay. And of course, if you can't pay premium, you can always cancel the policy, but that's silly. If we want to keep the policy going, these are our 5 options. Okay. Canceling the policy is like absolute worst case scenario. If we're 80 and we cancel the policy, guess what? We now have to pay taxes on all of the growth because they're going to send you a check for cash value. So if you're 80, you're better off to do an RPU and just stop everything so that you can still use the cash value, just don't pay it back at that point, right? But people are trying to say, hey, I should RPU a policy early on. Like I should be RPUing a policy at year 10 or at year 7 or something like that. Why? Why? If you are 50, 60 years old, we have years and years to live. Why are we RPUing a policy so we can start another policy? Even if we have one really bad year, why are we thinking we should RPU that policy? Can we borrow to pay for the cash value? And here's an example. I have a client that recently got her premium statement and said, Mary Jo, I only have half of what I need to pay that premium. And now she is in oil country. And so obviously oil prices have dropped. These oil clients, I am not. They make me nervous. Okay. So she's like, oh, I don't have the money. Oil prices are bad. We haven't made as much money. And I said, okay, shoot. Like when I issued that policy for her, I used a quarter of the income that she was making at that time. A quarter. And I was like, oh, we're going to be good. We're going to be good. Like worst case scenario, you make a quarter. Is that right? And she's like, oh, yeah, we'll be fine. Well, it's worse. Okay. So I said, well, these are your options. We can go to monthly. We can borrow cash value to make the payment, or we can RPU that policy. And I said, so what do you think is going to happen with oil? She said, in the 40 years that I've had oil money, she's like, it is up and down so dramatically. It'll come back. And then I'll still need a place to put money. So we just borrowed cash value. And then when oil comes back up, she's going to have a lot of money. And then she can pay back the loan and she'll have money for premium, right? Because of the money she had coming in, I only used 50% to even go to a policy. 25% of her money was minimum payment. So there are times that even I will like over project. And some of that is just hoping, I don't have oil money. So I don't know. I'm just trying to be super conservative. We don't know what happens with government. We don't know what happens in the business. Is the government going to say, hey, we're going to shut down all rental properties and then nobody has to, or we're going to make everybody with rental properties, they don't have to pay because of COVID because they can't work. And now you own rental properties and you're like, well, I don't even have any income. How am I supposed to pay my premium? So we have to make sure that we're always setting these up for worst case scenario. And I try very, very hard to do worst case scenario. Examples like this is why when people come to see me, I am over the top conservative compared to 99% of agents out there. I know a couple of them that are as equally as conservative as I, but not many. Most agents will push you because Nelson sort of pushes us too. Get as much money through your policy as you possibly can. Well, yeah, I agree, Nelson. But I also don't ever want to be stuck in a position where I can't pay my premiums. And I want to at least know I can pay my minimum and I don't have to do an RPU. So those are the different ways. Like if you cannot pay your premium, those are the 5 ways that you can still save your policy and you can still pay it in the future without that RPU. So there's 4 decent options. 5, that's your last resort outside of canceling the policy. Okay. I think that was clear, but I'm a little squirrely. So you let me know if you have questions, comments, concerns, whatever. Go get the book, withoutthebank.com. Go over to Farming Without the Banks podcast and listen to that because I talk about making sure you pay your premium forever over there. So topic of the week is premium. Let me know if you need me. You know where I'm at. Mary Jo at withoutthebank.com. Have a fantastic rest of your day.